We have the management of Kaynes Tech to give us more perspective with regard to the numbers. We have Jairam Paravastu Sampath, the whole-time director and CFO at Kaynes Technology. Welcome, Mr. Sampath. First off, I want to try and sum this quarter up, both from a top-line perspective as well as from an order win perspective. How's the order book shaping up versus top-line? And where do you see demand traction going in FY25? Just talk to us about that 70% growth you've clocked as well as the kind of order book that's shaping up.
Yeah. Thank you for having me on the show. Basically, we work in different sectors, 6 different sectors. This year, we expect some significant progress being made in some of the sectors which are doing infrastructure and things like that, like railway signaling, aerospace, space, industrial, IT, and medical. And so the order book is also kind of getting filled in with orders from these different sectors. And we are having a fairly robust growth in the order book. I think we closed to about 5,000 crores order book by the June 30th. And we think that this will probably further increase. And by the end of the year, we are looking at anywhere between 5,700 to plus 5,700 plus crores worth of order book. So the revenue growth is not surprising because our business is based on orders which have already been obtained. So, of course, the first quarter was kind of a muted quarter for many of the government purchases and so on, which drives some of our OEMs businesses. But I think now that the government is formed, the monsoon session is on, budget is presented, we think that second, third, and fourth quarter, we'll see some good progress being made in the sectors where we have salience and also we probably do well in terms of margins too.
Mr. Jairam Sampath, very good afternoon. Tamanna here. And thank you for speaking with us. So now, obviously, your revenues, EBITDA, even net profits have shown an impressive growth. But talk to us about the margins. Margins have been flat and, in fact, a slight dip, just 0.2%, so nothing major. Where is that pressure coming from?
Yeah, so firstly, the pressure comes because it's the first quarter. First quarter is about 15-16% of the total year's numbers. So you don't get good operating leverage in the first quarter because most of the fixed costs remain the same. So that's one reason. And the second reason is that during this quarter, this was almost the election quarter, right? Election and government formation quarter. So during this time, the government purchases were muted, especially in the areas that we like to operate. So that is getting fixed, I think. So we think that margins will recover going forward due to both one, each quarter being rather slightly bigger, and also the kind of sectors that are more value accretive, more business coming into those areas. So as we go through the second, third, and fourth quarter, I think from annually what we had said about 15% EBITDA for the year, I think we should get there.
So you see that bump up coming in quarter 2, quarter 3? Obviously, if you want to go up to 15%, I'm just trying to understand which is the best quarter and whether it's that lumpy.
Yeah, it's generally the last quarter which is the best because it's the largest. It's almost 35-40% of the sales. So you get the best operating leverage in the last quarter. But I think if you start seeing some improvements in second quarter, certainly third and fourth quarter are going to be very busy and good quarters as I see them now.
Got it. And so where do you go from there with regard to margins? Do you expect steady state to be around 15%? Because over the last couple of years, it's been around that 14-15% kind of band. So you expect it to be around there, or do you expect that you will be able to take it above towards the higher teens?
Yeah, so in the EMS business, it will remain somewhere there, maybe a tad higher if we are able to get orders locked into some of those high criticality, high complexity sectors. Going forward, maybe once the other businesses kick in like OSAT and high density PC board, you can see an upward movement in the at the EBITDA level. So the EBITDA go up, they fluctuate around a base number. So if it was only MS business, it will be around, let's say 15.5%. Around that, plus or minus 1% will be the kind of movement. If it is other businesses like let's say FY28, maybe we get significant traction from our semicon business as well as PC board business. EBITDA is on a blended basis, it will be a tad higher, maybe 1 or 2%, under 200 basis points higher. So it remains to be seen because those are new projects. We haven't yet established them. So at this point in time, I'd just suffice it to say that if everything goes as per plan, you can see an increase going forward too.
Just to speak about the PCB business, Mr. Sampath, you've mentioned you're investing, I think, around 1,200 to 1,400 odd crores in this. Are you looking at manufacturing in India from scratch? When does that happen? Can you just give us a sense of a timeline as far as the PCB business is concerned?
Yeah, the PC board business currently is all imported, and especially the high-density interconnection, the multi-layer boards, which are very highly profitable. They all come from China, Taiwan, Korea, and other parts of the world, including Europe and US. So we are setting up a greenfield project here in India. So we will start this business, let's say, posting significant revenues by the fourth quarter of FY26. It takes about 1.5 years to set up a good high-quality PCB plant. So this will be probably one of its kind in India because most of the other capacities have been on the more on the simpler PC boards, whereas we have gone straight away into the technologically high-end, high-density interconnection boards, because it has been our endeavor to make sure that we upgrade the technological strength for our offerings, because we know that going forward, a lot of players from outside of India will be in India. So we cannot run the business just on the basis of labor arbitrage alone. So we've been endeavoring to, for instance, in OSAT business, we go for advanced packaging. Here we go for high-density interconnection. Even in EMS, we want to be an integrated EMS player. So these are some of the plans that we are working on, and hopefully we will succeed and should be able to see them in action shortly.
Understood. So just on your top line, so you've got a strong order book, strong order pipeline. What's the estimate? Where should your top line broadly lie at the end of FY25?
FY25, we have said it's around 3,000 crores. So if there are any changes, the second half will come to know if anything better is feasible. But certainly at a minimum, we should probably close at about 3,000 crores.
Understood. And with regard to the OSAT business, you've suggested kickstarts 18 months from now. Of course, the prep, the groundwork has already started. Just talk us through how that adds to your top line numbers starting FY27.
Yeah. So just with the caveat that it's a little premature to talk about numbers in that business because we haven't yet made the factory. But we are quite confident based on the business portfolio that we are endeavoring to construct. We will work in the advanced packaging area, and we will have the latest generation. Almost 75% of our capex will be aimed towards advanced packaging, and we'll not do too much of legacy packaging. So that pushes up the profitability too much, but of course it puts responsibility on us to put more technical manpower in aid of, let's say, new product development and so on. It's a little harder to do, but once done, much more remunerative. So, like I said, the 2 years will be spent in getting the projects off the ground and also getting customer approvals and so on. And then thereafter, of course, we start with a 40% utilization of the capacity in FY26 end. And then thereafter, we take it to about 80%. And so we'll keenly watching the quality of work that we do so that we, in the beginning stage itself, we build a good portfolio of services with clients who require advanced packaging and so on. So that's our endeavor. Let's say how fast we are able to do it.
Mr. Sampath, just one point on the rail business. I mean, it's contributing about, I think, 11%, 8% of your revenue in this quarter. But just want to get your sense of how much potential you see in the efforts of the government to strengthen the Kavach system. Even in this budget, a significant allocation is towards railway safety more than anything else. Is this good news for Kaynes Technology?
It's hugely good news. There are two parts to this. One is the signaling system. The other is the collision avoidance system. We are also investing close to about 40 crore rupee into developing the train collisions avoidance system through technology providers from Europe. So we will be definitely, of course, it takes a bit of time to develop and approve it. But on the signaling side, we already have ready-made clients, and we have pretty high market share among these clients for signaling systems. So as you correctly pointed out, government is hoping to get their act together in terms of doing this stations, different stations upgradation of electronic interlocking. And we definitely plan to contribute a lot to that effort.
All right. Thank you so much, Mr. Sampath, for speaking with us.